What is going on, ladies and gentlemen? Welcome back to your regularly scheduled programming. Yes, we are indeed live. If it does not say live in the bottom right hand corner of your screen, getting a little bit ahead of myself there, go ahead, refresh the page, click back on the main channel, and get yourself on the live stream that is currently live. We would love to have you. We got a lot to talk about here in today's live stream, baby. I hope you guys are ready. I hope you guys are jacked to the tits, ready to go. Fed Jerome Powell today, Fed Jerome Powell tomorrow. You can never get enough Powell. You know what I'm saying? You know what I'm saying? What is going on, baby? Chris, the Win Lambo. Man, Lambo, I feel like it's looking further and further away, man. I don't know. It's looking. I'm excited, but it's just the market is not excited. Let's go, baby. Big Blue CNC always in the building. Alex, my love, what's going on? Futures, dude, futures are very volatile today. Very, very volatile. They were just positive not long ago, and now they're negative 0.5%. So we'll see where they go by the end of the live stream. But today was very interesting. You got the Fed, you got inflation concerns, you got recession concerns. A lot of today was actually categorized by the recession concerns, and I want to talk about that a lot here today because, I mean, recession, it's one of those things that has been so widely televised, telegraphed, whatever you want to call it. And we pretty much know it's coming, but is it priced into the markets? That's the key. We get the actual GDP report, so when we could be in a technical recession, July 28th. So I think a little bit of the concern, maybe a little premature, considering the data doesn't come out for about a month and a week from now. But either way, you could see downside because of it, but I still am sticking firm with my bullish prediction. I think it's going to be good throughout the rest of this week, maybe next week as well. We'll have to look at what the economic data looks like for next week, and we'll actually go ahead and do that right now. Get a little preview of what to expect, because that'll be the week of June 27th. You got durable good orders month over month. That comes out next Monday. And why I'm doing this? Yes, Chris, what is going on, brother? You are handsome as well. Keep shining out there, young king. All in AMC, sup, brother? I like the name there. Larry Lewis, hello, Tyler from Southern California fans. Man, SoCal. Man, I want some of that weather. It's been hotter than ball sack. It's been hotter than, dude, the crypto market bankruptcies out here in Michigan, and we're not about, the 95-degree days. That's like the end of the world here in Michigan. So it's been good. What's up, Ugans? What's going on, bro? Ugans is always in here. And you know what? I gotta add Chris as a moderator. This guy always in here. Win Lambo. Gotta do it. I gotta do it. What's going on, Cheese Chaser? Chasing that cheese. Hopefully making some cheese, huh? What you guys buying out there? Let me know. I've been stuck on a couple stocks, but I would like to diversify my range of stocks I'm looking to add, because everything looks so good right now. Psychologist 69, what's going on, brother? Creamy goodness, hey to you, my friend. Evergreens almost moassed today. Almost moassed today. I ignored the rest of the market to buy more AMC shares as instructed. Why is my wealth growing? This makes no sense, man. I agree. I know you're being sarcastic, but I feel it, dude. We were like this close. Like this close. Chris in Lambo. Yeah, I think the wrench just looks better, honestly. honestly. I feel like everything just looks better with a wrench. You think AMC gap fills that 1180? Dude, the key level on the downside I want to watch for, if we get more downside, which we were down 1% after hours. The stock's so cheap now, 1% is 13 cents. So I wouldn't hold a candle to it in that regard. You are in a slow and steady uptrend, believe it or not. The stock is trending to the upside, which is a wild concept. Just thinking about the last month and a half here, it's been pretty flat, but overall on a decent little uptrend here. Especially from the lows, you're on an uptrend. But the main level I want to watch for potential downside to see if we will hold that support is really that $11.45 to $11.50 range. It's been such a key level intraday and the lows of the days, as well as the closes. You've come down a couple times under this 1150 mark, but you've always closed around that level. You could see these days in here, this day right here, this day right here, these 2 days right here. So that's the level I want to watch to the downside. To the upside, I do have this level marked, and I've had it marked for quite a while now, which is actually $12.77 per share. We were above that at most of the day. We were above that, and then we did end up falling under that by the end of the day, which does look to be the trend as of recently. You guys can see right here, ever since we broke under, it was support. It was clearly a little bit of support in here for 2 days. You broke under, became resistance intraday. At one point of the day, you did come up and touch that level, ended up obviously coming down and closing towards the upper end range, and then you came down, hit $11, found support at this lower end range, and came up, tried to test it right here 1, 2, 3, 4 times, and we could not get a close above it. So I really want to watch that 1170 area. If we can close above that, if we do get a good candle, then I think it's possible we could even gap fill to the 50-day moving average, 100-day moving average, this orange line right here, which is at $13.93 per share. That's the level that I'm really looking at. Just join the channel, baby. Little coin. There we go. Let's go. Oh, evergreens. Okay, little coin. Like evergreens, he will clap you, and you will think he's being an asshole, but he's actually showing love. Like, it's a weird dynamic we have going on, but he's always in here showing love, but in a different kind of way, okay? But there we go. Yeah, if you guys do want the little highlighted green name, it really does stick out in the chat, then the join button is on PCs. It's not on, I believe, iPhones. It might be on Android, but I'm not so sure. But I do think this week will be bullish. Let's put that out there if you guys have not watched the videos. As long as the bank stress test is positive, then we're going to be good. Because today, the fear was all about a recession. That's what people cared about today. That's it. It wasn't even inflation. It was recession fears. Evergreens. We love you, Evergreens. We are live, vlog. Yes, indeed, baby. Win, dodge, dart. Man. Shit, that's like so far out of my portfolio's price range. It's ridiculous. I'm just playing. I'm down like a dodge dart. Let's be real. I'm down. How much does a dodge dart cost? I'm down. But you know what? I ain't selling, baby. That's the beautiful thing. Uptrend, what's that? Yeah, what is that? I'm swinging Rev and Pev. Rev and Pev. That's just, that goes together too well. You gotta make money on it. You got to. Major profits in both, going for more. Dude, we're still waiting, Evergreens, for you to show us the way. Okay? Tickle that like pickle. Who remembers the tickle, touch, tap, or smash the like button days? You're a real OG if you've been around that long. Tickle, touch, tap, or how's it? Tickle, tap, touch, or smash the like button. It's been a while since I said that. I'm gonna have to throw that in a video, catch everyone off guard. You think crypto retests lows over the next month? I mean, we are at a very bad level. Like, if the bank stress test is bad, it's going to feed off into crypto. Crypto has like its own little weird thing going on right now. Crypto is different from the market. So crypto is facing the same pressures that the stock market is feeling. They're essentially facing the higher interest rates. Just people not as inclined to buy stocks right now. They're facing the same pressures, right? Recession fears, all of that is the same. But with crypto, you don't know what is going on under the surface. So this actually came out, and we actually did talk about this in the last video, but Voyager Digital, does that ring a bell? I'm sure you guys have heard that word a couple times. Their stock plunged 60% today after revealing they have $665 million of exposure to embattled hedge fund. Hey, wait for it. Wait for it, if I could find it. Three Arrows Capital. And they are not repaying their loan. They have lent them 15,250 Bitcoins, worth about $315 million, and about $350 million worth of USDC. So, if this kind of shit keeps coming out, it's like, how deep is this problem? Now, at the same time, the margin debt. Now, obviously, crypto margin debt, it's going to be a little bit different. I personally don't trade crypto like that. I buy it every now and again. I haven't bought it in quite a while, but I have not used any kind of margin or leverage on it. I know you can. I'm not sure if it comes up in the margin debt data, though. I imagine it probably does. But either way, this can be an example for the crypto markets as well. So what we've seen from January 2022 is $829 billion of margin debt only go down to $752 billion, or almost $753 billion worth of margin debt. So that is less, that's like $70 billion of a decline, roughly, right? My math skills are iffy, but about $70 billion of margin debt has been reduced in 2022. Compared to a 30% drop in the NASDAQ, you're 5 to 10% of a decline away from seeing like a mass liquidation event. So it's, I would imagine, the same way for crypto as well. The leverage has not been going down nearly as fast as the stock market has been going down. And I would imagine it's the same with crypto, but it's different. Audits and all that happens to public companies obviously don't happen in crypto markets. So that's the problem I see with crypto right now. I like the Challenger too. I'm definitely a Challenger guy. Definitely. What's up with Mullen stock? Boom or doom? I've basically said Mullen from the start. Okay, what's going on? Is something happening with Mullen? I seen it. It's been doing its thing, and it's been very volatile. People have talked about a lot of large orders for Mullen. It's at $1.60. I think it's one of those stocks, and I've said it from the beginning, that it offers a decent risk to reward profile, right? It's one of those where you could get paid out big in the future, or you lose every dollar you put into it. I don't know about any kind of like short squeeze. We can look at the data. I have not personally looked at it, because you know what I did? I bought 500 shares at 70 cents per share, and then the stock went to $4, had a lot of gains in it, but I sold calls against my position, made 100% profits by letting those calls expire, and I am holding my 500 shares for the rest of my life. If it goes to zero, it goes to zero. I made 100% on my capital. If it 50x's in the future, great, right? I'm going to make 20, 30, 40, 50 grand. But Let's see. What's it look like? Short interest is about oh, geez, the cost bar max is wild. 11% short interest. It looks like it just off first glance, low short interest, high cost to borrow. It's probably because the utilization is at 100%, and it's probably a hard stock to get your hands on shares, which is very interesting in and of itself because I believe Mullen has 473 million shares outstanding. Hugs, Evergreens, hugs. Yes. Everyone, just feel free to send your love to Evergreens like whenever you want to. Like even if he's being real chill and cool, like he's being cool today. I feel like he's being okay. Just send him love. I think he likes that. I think he does. Just hugs. Hugs. Evergreens, hugs. That's so funny. Mullen is going to get manipulated again and again. You will see. Makes a lot of sense. Mullen getting added to the Russell. Yeah. Fortune 500 company. Vandal coming. OEM battery news coming all before next 2 weeks. Yeah, they did have the really good news about the battery situation, which I believe was a couple days ago. And then they are being added, I believe, to the Russell 2000 and the 3000. I know for sure the 3000, but I think I've seen the 2000 as well. And this says that Mullen Automotive Inc. files 130 plus U.S. international patent applications for Mullen 5 EV crossover. And that's the problem with Mullen. That's the real risk. You know, with this market environment where Mullen is at, if they can deliver the Mullen 5, if they can deliver a damn vehicle, their valuation should go up a little bit. But on top of that, it's very hard to manufacture vehicles, especially in a high interest rate environment. It's not easy. It's not easy to put up the capital to make the vehicles and then to also sell the vehicles, especially when people are just slowing down. Like, not every day do people go out and buy vehicles, especially when interest rates have done what they've done in 2022, making a historical move to the upside. So that's the real problem. And that's why so many automakers end up going bankrupt. These cycles are really, really tough on automakers, more than anyone else. Dude, look at like '08. Like, a lot of people had issues, but automakers had more issues than not. Than most, I should say, than most other sectors. It's just because people they're not out rushing to get the next, vehicle that comes out. Anything new regarding the executive order? I have not heard anything. So I believe it's in effect. I strongly think that somebody would have covered that. Motley Fool or somebody that was wishing that AMC goes to zero would have wrote a piece about that, because it was pretty highly televised in the whole community. So I do believe it went into effect, and I do think it will have an effect down the line. Like, I don't think it was worthless. I did expect that to see a bigger reaction. Then again, when we seen the reaction last time with the executive order, it was during a market that was not close to where we are now. Like, we're not even in the same ballpark now compared to where we were a year ago. Like, so much has changed in a year, it must be a record. Like, the fastest overall flip is just wild. Yeah, Revlon stock, though. I do want to see. I mean, get out of here. Well, they do have 76% short interest. 3% cost to borrow minimum. Very strange. 618% cost to borrow average and 902% cost to borrow max. So it's a very strange one as far as the numbers. But it's definitely doing its thing. I'm not sure the actual details of the buyout offer, whatever they had going for them. But I mean, you probably could make money on it, given where the short interest is, all of that. If the company does actually survive and they do get bought out, depending on the price of where they get bought out, that's going to be substantial. And you are at a critical level, really, when it comes down to these this long-term just support level. I mean, look at, like, it's picture perfect. Like, let's be honest. Like, look at this. You draw a line. Let's take the moving averages off, which they're very important. But, okay, I did not mean to do that. But, I mean, look at where we peaked out on Revlon. Like, this was the support level since November of 2020. So, there could definitely be more upside in that sense, but there has definitely been a lot of volume, a lot of attention come into the stock. I might wait and see what it does. Maybe position on the smaller side. I definitely wouldn't throw your whole portfolio into it, but it could be good. It's strung together quite a few strong green days. Jeez, it's actually kind of ridiculous. 91%. 62.5%, 34.3%, and then a 3% move in after hours. So it is definitely moved, but very important level. Really, if you want it to be safer, you could wait until the stock does break out above that $9.92 level. You could call it $10 if you want to, just for the psychological aspect of that. And then if you can break out above that, that's where you could see a move, closer to about 20. Next level I would watch would definitely be around 1750, these prior peaks over here. That's the way I would look at it on a technical basis. Moving averages supports the same thing. Really, this moving average up here, 200-day, that's going to be your important level. It's only at 915, and obviously, $10 is more of a important level, but still, you probably want to see a close above the 200-day moving average, because we did not get that today. So if we could get that tomorrow or over the next couple of days, that's possibly when I would initiate a trade, or just day trading it in general. I mean, looks nice too. Yeah, serious resistance at 10. PEV. Phoenix Motor. No way they just went public. Not in 2022. You are not seeing IPOs right now. 57 million for volume. What's the deal with it? Phoenix Motor. Was it a wouldn't surprise me if it was a SPAC. Not XPEV. Yeah, maybe it was was it an IPO then? On the yearly chart. Am I looking at the wrong stock? He said look at it on the yearly chart. Pew pew pew. You wait till it breaks past 10. You ain't buying till 12. It's gonna run like crazy past 10. What's the buyout price? Or the offer price, I should say. Googler. That don't work. Huh. Is it just speculation then? I thought there was an actual offer. Chart's so fat, bro. Yeah. I was playing NMTR today. It got halted like 20 times for such small movements was weird. It's those damn market makers, bro. Oh, yeah. I mean, it looks like it's thinly traded, though, too. No, I guess not too bad. I mean, on the daily, today was 8.5 million for volume, so it's not terrible, but some of these 1 minute candles are like 1,000 volume. Probably just the volume spikes. Like, some of these candles are very small, and then some of these candles are really, really large as far as volume. It's your boy. What's up? Have you guys seen that movie? That's my boy. Says what's up. Reliance Industries is the Indian company rumored to be interested in buying it. Man. That's just a wild one though. Revlon, like out of all companies, like these females are trying, to still get makeup. I don't think a recession's gonna stop that. And they're like, boom, yeah, guys, we're going bankrupt. Like, that's it. We've been around like 100 years, but it's over. Like, the stock was trading at $41 and it dropped to $1. That's nutty. That's crazy. That's wild in and of itself. So I wonder what a buyout price would be, but NMTR, this looks so orchestrated. Like, look at it. Just fat candles after staying sideways. A fat candle, fat candle, fat candle. And then a couple more fat candles. It's those damn market makers, man. But yeah, again, PEV. Strange. What was... Yeah. I mean, 57 million for volume. This stock really doesn't get volume like that. It doesn't look like, 80,000, 60,000, 90,000, and then 57 million. It was a decent volume day, it looks like, for PEV, but what is Phoenix Motor? That's what I want to know. What's the market cap on this thing? 114 million? Mullen is for chumps. Said, damn, it was hot today. Remember to drink lots of water and stay indoors between 11 a.m. and November 2nd. Yeah, Michigan was hot today. I think it's going to be like 90s some more. The one day was like 100. And I feel for you guys in Texas because I was looking at the heat map. Not the stock market heat map, but like the Weather Channel heat map. And that shit looked terrible. Y'all are going to have blackouts. Everybody's running the AC. Not sure If it's talked about, but thoughts behind your Affirm and Square trade. So, with Affirm and Square, they're stocks um, that fit a lot of the criteria that I like. They're stocks that have been beaten into the ground, that have reported good earnings, that had bullish reactions after their last earnings, and they are stocks that can move pretty damn big if you do get a bullish reaction. Especially Affirm can move really big. Like, to see Affirm on a risk on day up over 10% is not uncommon. I own Affirm, and if there's a risk on day, Affirm's usually going to be up like 10 to 15%. So there's that. There's that part of it. But I do just expect an overall bullish reaction. Over, probably tomorrow. It does suck the stress test results don't come out until 3:30, because that's going to be a huge catalyst for Friday. Really, for Friday. The end of the markets tomorrow, that's going to be important. But Friday is going to be big. And if that is good, then that's going to be a lot more reassurance of stability in the financial system. And that also directly plays into Affirm and Square, because they are also in the financial system. So odds are, mathematically, statistically speaking, or just you could call it expectations for the markets, if the banks are doing okay and they can withstand a shit show 50% drop in the stock market, 25% default rate, 15% unemployment, then that should feed off and be extra bullish for some of your fintechs. Affirm, not really a fintech, but kind of a fintech at the same time. They're definitely in the lending space. So I think it could be ultra bullish for them coming on Friday. Possibly not, though. That's why I did go with July 15th, because I do think there's a lack of economic data. So usually when there's a lack of economic data after we just passed a major catalyst, like the Fed meeting, the Fed, raising rates, and what happened just, a couple days ago with that, then you usually do see a bullish reaction in that space of time. Now for next week, for Monday, June 27th, because after all, after the bank stress test Friday, you really don't have anything for economic data that's going to move the markets. Taking a look at Monday, you have durable goods orders, which is expected to be a high volatility catalyst, kind of event, and it could be really. It's probably going to come in at expectations. Usually it does for the most part. If it doesn't, it's usually not a crazy catalyst. It's not like retail sales. It's not like GDP data, but it still can be important nonetheless. And then on Tuesday, you really don't have anything too crazy. Goods, trade balance could be important. Obviously, that's what weighed on the GDP report for Q1 quite substantially. Some real estate data, retail inventories, excluding autos, also could be interesting. Wholesale inventories could be interesting, but not expected to be a huge deal. Wednesday, let's see. You have GDP growth rate quarter over quarter for Q1. These are going to be the final numbers that do come through. Expected to be about the same, 1.5% to the downside, as you can see right here, is what we're expecting it to stay at. So I also don't think that's going to be important. And then you do have the PCE data that comes out 7:30 in the morning on Wednesday. That's probably going to be the biggest catalyst so far for next week. And then on Thursday, personal income month over month, personal spending, PCE price index, month over month, year over year, core PCE. Yeah, pretty much it. Friday, ISM manufacturing PMI. So really PCE and this manufacturing PMI probably going to be the biggest things. That's Thursday of next week. So if I were to make a call here, probably, a bullish reaction over the next 5 to 10 trading days. You are still sitting at really low levels in the markets. All things said and done, even after this 3% 3.5% move we've seen off the bottom, you're still at really low levels. Until you get new information that freaks out the markets even more, I think you'll probably trend upwards. You know, maybe go as high as like 400 on the S&P. Because after all, crashes usually don't go down in a straight line unless it's COVID, right? Like, look at the 2008 crash, or even the this crash in here, not 2015, but this one, 2018, right? You came down, whoa, everyone's freaking out. You came down, how much did you come down from the top? Geez, that looks a lot bigger, but it says 12%. People were freaking out actually more when this first initial, because it was pretty fast. Only in a couple trading days, you've seen a 4% down day, a 2% down day back to back. That was 6%. We're used to it, so we're like jaded to market crashes, but usually the markets don't fall this fast to the downside. And then, you know, people are like, okay, we're getting back to normal. No, we're not. And then, okay, we're getting back to normal. It's okay. Slow and steady uptrend. And then all of a sudden, it's not anymore, right? It's choppy, and then boom, you get the flush out. Christmas Eve, markets ended up bottoming, and then you do recover. But this was a whole year of essentially all-time high, come down, you know, go back up, hit a brief all-time high, and then come down much lower and hit lower lows. So Mandy, can I be your boyfriend's husband's friend? I feel you, bro. I feel you. Like, if all things go bad in the stock market, can I come live with you guys? Is that okay? You know, get on a train or a bus. Do people take trains anymore? I think that's like Chicago, New York shit, but I don't know. You did what with the cow? Man, the country is real wild. Oh, God. Y'all are going to get me banned off YouTube. Like, perma-banned. But yeah. So, usually crashes are not fast like that. Besides COVID. Usually it takes a little bit of time, and that's kind of why I did make those trades. He said jaded, bro. What else should I say? It felt like a very appropriate word. I think we're jaded to big down days in the stock market. Like 6%, forget it, dude. We're down 30 in 6 months. Like that's like 6% per month or 5% per month. Like, dude, we're so used to that. It's like nothing at this point. You know? So I felt like it was appropriate. But even like '08, I think that's a better example of what we could see. The '08 chart is real nasty. So, yeah, just kind of like, down, up, down, lower, up, down, lower, up, down, lower. And then when you thought it couldn't get worse, you bounced up and then went down even lower. So that's kind of what I expect. But these are all bear market rallies that you've seen in here, right? You hit the lows, rally off of it. What was this? That was a 11% rally from the bottom. This was a 7% rally from the bottom. These are probably 5 to 7% rallies. Here and there, that's what you'll see. You all tipping cows in Michigan? Man, I've never actually tipped a cow. I think they like, I feel like people keep their cows locked up a lot more now. They're like, don't touch my cow, dude. I actually know somebody, which is fucked up. When I was a kid, like I was younger, my friend's mom actually hit a cow in her car and like got messed up. Those things are no joke. Cows are dangerous. It's facts. They're dangerous. What are futures doing? I feel like I'm just babbling. Like, futures are so volatile today. I don't know what it is, but just so volatile. Like the Dow down 0.27%, S&P down 0.30, Nasdaq down 0.31, oil again down 2.88%, and you're definitely seeing that recession concern. But a concern, until it's validated, it's, I feel like you've already seen a 30% drop in the Nasdaq, so it's one of those things where until we get the actual data for a recession, you've probably priced in a decent amount of recession odds here into the markets, and you can see that with the bond moves we've seen today. So it's actually not coming up, but we were down like 0.14, almost 0.15% in the bond market. And essentially why that is, just so you guys know, this could make you guys hopefully a lot of money in your investing lifetime. But when this 10-year treasury drops and people are talking about a recession, or even if they're not, but you're seeing bad data coming out, then that means people are starting to position for a recession, because the bond rates, at 3.15%, if you thought there was going to be a recession, there was going to be deflation, companies were going to miss on earnings, everything was going to be bad, but still have deflation, meaning your essentially money becomes more valuable, then 3.15%, not a bad return. Or just the dollar overall strengthening, I should say. Then 3.15% return, not so bad. And that's why the bond yields drop so much today. Now, in a normal market, that should have helped stocks go up a lot more. But it did not, because of those fears of recession. But it should help to a certain degree, not let us crater, like, just plow through lows. Because ultimately, when investors start to buy the bonds and drive the yields back down, lending rates are going to go down as well. Like what happens during a recession. Typically, when you will see the bottom in the markets is when the markets realize that the Fed is, like, we are light years ahead. Like, okay. If there's one thing you ever listen to here on this channel that will make you money, I don't know when, but it will make you money, especially if you're a trader or long-term investor, it doesn't matter. Listen to this. The markets bottom when the markets realize that the Fed is going to raise rates during a recession. We will know that roughly by July 28th. If we go into a recession and the Fed is still steadfast at raising rates and doing quantitative tightening, and they don't pull back like they usually do when a recession comes. We've only raised rates during a recession twice in history, and that was during the last battle with inflation. That's when the markets will ultimately flush to the downside. And by then, we're going to have the next earnings that are coming out, right? They're going to start reporting in July. You're probably going to have an overall just negative market sentiment. And that's when the markets bottom, and that's when I do expect to see more downside. But from now until mid-July, or even like call it July 10th, July 15th, kind of like mid-July. I'm not sure the exact day, obviously. But until that time, over the next 2 to 3 weeks, I do expect somewhat of a bounce from here. Until the markets realize the Fed will raise rates during a recession and they're not going to fuck off because we're in a recession. Basically, we're screwed at that point. So, there you go. There you go. That's one thing that I would listen to and really, really stick in your brain. Because that's where, like, forget the puts you've hit so far. that's when the money will be made. Especially the higher we bounce. Until then, that's where the money is. So keep that in mind. Keep that in mind. That's a true golden nugget, as Vlog would say. Hit the like button for the golden nuggets. Enough DD for me to buy in. I like it. I like it. What's the cost to borrow for AMC right now? It did go up today, which I think is showing that there's really a lack of shares available. But cost to borrow minimum, it did come down a little bit. 14.6% now. Cost to borrow average staying in the 19.19%. Cost to borrow max of 23.29%. So still, high on a just average basis of like normal stocks. Like a cost to borrow max is like 3% on a normal stock, like a Tesla, which is even more so volatile than a normal stock. So where we're at right now is categorized as extremely high. Now, like these numbers that we're used to seeing, even if you look at what's that side? Revlon, like 600, 900%, Redbox, like those are not normal numbers. That is like a sign of, could be manipulation, could just be the pending short squeezes and maybe across the markets. Hopefully, that would be a pretty cool thing to see, like we seen last time around in June of 2021. But these numbers are very high, and it does put a lot of pressure on shorts, or just people that have shares out on loan. Like their free flow out on loan is 37.5%. The short interest is 22.56%. So there's really like 80 some million shares, a little bit less than that, maybe 78 million if my rough math is correct here, of shares that are still out on loan that have not been sold short yet. Weber. I used to live on a street called Weber. Okay. Decent moves. Yeah, I mean, as far as the chart, it's been pretty much straight down. So if that marked the bottom, 569, that could be good. I have no idea what's going on with the stock. I don't know what the news is behind it, but that's why specifically I do like these moving averages right here. If it wasn't obvious from Revlon how important they are, here's another example, right? You break out above the 50, and that's at $8.15 per share. And then you go straight up, another dollar and some change, and come up, try to test the 100-day moving average, and you come very, very close to it within like 8 cents, literally 8 cents, get rejected, and then come back down. So what I want to see is, a break up close to that level. If you could make a trade on it, that's cool too. Volume did spike today, but it's still low. I mean, 2 million shares. That's really, really low. So if volume comes into it, that's where you could do very well. But opportunity of a lifetime. I really do think this is the opportunity of a lifetime. You will not get this kind of buying opportunity for a while, unless there's like a asteroid that has like a good probability of hitting the earth and then just like doesn't. That would be like the best buying opportunity, but you don't get chances like this all the time. It takes a pandemic, it takes like a World War III, it takes a very substantial event to get a 30% down NASDAQ in 6 months, almost 7 months, and we're not done. Like, all things said and done, we're gonna be down like 50% like we were in 2008. Maybe more than that. Hopefully, like, the war in Ukraine ends and we can divert this depression that could possibly come. Hopefully that's possible. Hopefully that happens, and we don't go into a depression. But usually you don't get buying opportunities like this, especially across the board. Like if there was a stock you wanted to buy in 2021 that was just too expensive, too overvalued, it's probably a fair value now, if not undervalued. Like a lot of stocks are undervalued now, like substantially undervalued. Find any stock at an all-time bottom and it's ready to pop. Yeah, that's probably not a bad strategy right now, to be honest, because like not too many stocks are at that level. So those stocks that are currently sitting close to their all-time lows or their 52-week lows probably were oversold to the downside and probably due for a bounce. So that's actually not a bad strategy in my personal view, personal opinion right now. $64 July 1st calls on KO. Also, KO gained 40% in 2008. That is, dude, I know what that ticker is. Coca-Cola. Okay. I never look at Coca-Cola. Like, I've heard KO, the ticker, so many times. Coca-Cola. Got it. Yeah, it's one of those, I mean, like, it's done very well since COVID. So I'm very fearful, call it that, of like oil, very fearful of your quote-unquote safety stocks, just because one day they will no longer be safety stocks. One day they will fall and might not come back to these levels for a while. Now, people argue like there's the dividend, that's all fine, but ultimately, you know, I think something like a Fubo, if you want to get a little bit more risky, or something like a Square, or even DraftKings, a Firm, depending on your risk level. Obviously, those are not for all people, but they offer a much higher risk to reward, because that's what you want to look at. Like, what is the risk of Coca-Cola? Pre-pandemic, Coca-Cola was at $55 a share. I mean, it's currently trading at $61 a share. So your risk is probably not too high. Worst comes to worst, recession comes, people slow down, the stock's probably going back to like $45. So it's a decent decline, especially if you have a lot of money in the stock. But like, what is the probability of the stock doubling from here? Not that good. So I'm very careful and very leery of your quote-unquote safety stocks right now. And Coca-Cola is definitely a safety stock, and it doesn't move that much. Like, that's the hard thing when it comes down to specifically like options on stocks that don't move a lot. If you don't have a catalyst for the markets, like we really don't, besides tomorrow and the Fed stress test, and then the PCE, the ISM manufacturing data for next week, it's probably not going to move around a whole lot. But, you know, then again, premiums are usually cheap on stocks that don't move around a lot. But you really want a catalyst to get paid out big on something like that, if that makes sense. Now, FedEx has earnings tomorrow. And this is a stock I am going to buy puts on tomorrow. 100% going to buy puts on FedEx. And that's really because the price of energy. Price of, delivering things, not so hot right now. And it's actually on a bit of an uptrend from the lows at 192 that we've seen. Premiums are pretty expensive last time I checked. We'll go ahead and look, but this one could pay out really big. If the price of oil, like I think it is hurting the bottom line profits, could pay out pretty decently. Puts, yeah, like a 185 is $150 for July 15th. Give you 4 weeks of time, 3.5 weeks of time. And that would put the stock back, under its recent lows, but not too far off. What kind of decline would that actually be? But the time premium on a extra 3 weeks would do well. Yeah, that'd be about an 18-19% decline from where we're currently at. Who knows? Who knows? Could pay out good. But it's definitely not the cheapest trade to be in. Lil Coin. I get up around 4 a.m. and I see some strange shit going down, spinning stocks up and down. It sets the day in the market. 9:30. The spun up runners get FOMO money run. Yeah, that's kind of how it is. I guess you kind of get everything moving together. It's those trading algos, and that's the biggest thing that I try to focus on is like what's priced in, what's not priced in, because that's what the algos are doing. They're using different emotions. They're using different data points. They're using hundreds of data points to really push and pull on different stocks, and usually that does happen in the first couple of minutes. That's where you can potentially make a lot of money very quickly, or lose a lot of money very quickly. A lot of people only trade the first 30 minutes or the first hour of the market, and then only trade the last half an hour or hour of the market as well, just because of how the stocks move, and given the computer trading that dominates the markets. Like, stocks don't trade based off of supply and demand anymore. Like, let's be honest there. They can to a certain degree if you get like short squeezes, but it really trades off of market makers, market expectations, what's priced in, what's not, news that we get throughout the day. That's what really moves the stock market in a big way. FedEx already ran up pre-earnings, buy puts. It's already priced in. Yeah, I think so. It's one of those where it's almost so obvious that it should be like 100% priced in. Like, it's one of those weird things. It's one of those weird things where if FedEx did actually do well, and fuel didn't hurt the business as much as people expect, could do well, but then again, like you said, it's up 13% in the last month. I wouldn't be going long on it unless I had wanted some like close to the money exposure and a lot of puts on it. Like, that's really the only way that I would trade it. But definitely some July 15th puts looks like the trade on FedEx. And they report earnings tomorrow and after hours. So this is not a pre-market trade. Obviously, I'm not a financial advisor. Nothing is guaranteed. Who knows? In this market environment, market makers are going to do whatever they want to do. But it ultimately could be a good trade, in my personal opinion, just given the connection to oil that they do have, and given this level that they're at. I mean, they're at a pretty important level. I mean, this is like the median level of the highs that we have seen throughout the last 5, 6, 7 years now, right? And when we did in 2018 fall from this level, this 230 level, you went all the way down to $88. Even pre-pandemic, before COVID hit, you went down from 275 to 139 at the low before the pandemic. So the FedEx can move, pretty decently. These 3 weeks, you dropped 12%, you dropped 8.5%, and then you dropped 14%. Those calls would have paid out, or puts would have paid out big in that scenario, or this scenario right here. Same thing. So I definitely think that's the trade. But yeah, thank you guys for tuning in. Thank you guys for joining me. Evergreens, the Little Coin, all the mods. Appreciate every single one of you guys for being here and being a part of what we do here late at night. Last look at the futures before we go ahead and wrap it up. Nasdaq down 0.31%, S&P down 0.29%, and the Dow futures down 0.25% as well. So could go either way. The Fed's going to be the most important thing in that, well, not really the most important thing, but earlier in the day, 9 a.m., you're going to wake up to Fed comments. I don't expect anything drastically different from yesterday, so I don't think it will be a big deal. But the Fed bank stress test is technically what it's called, is going to be tomorrow at 3:30, and I think that's going to be a big catalyst for the last half an hour of the day, and then I think it's going to be the main focus point of Friday. So keep that in mind if you guys are looking to trade that. If you think the banks are in a bad situation, do what you guys want to do. If you think the banks are in a decent situation, do what you guys want to do as well, but just know that Friday is probably going to be the big move on that. And even if you wanted to trade it, you could honestly wait until the report comes out at 3:30 and then make your decision based off of what we see, because just like we have noticed at the last two Fed meetings, we rallied after the Fed. Even though it was negative what they did, the next day you sold off all of those Fed gains plus some. So thank you guys. Thank you, Big Blue, CNC, Notorious Little Coin, all of you beautiful souls. You guys enjoy the rest of your night.